Good afternoon and welcome to CanadianAgMarkets.com. My name is Brian Como with Ireland Como Lafoy. We got some bullish news today. We got some bearish news today. And we have some information that should have been bullish but didn't trade that way. So let's get into what is happening in markets, or what happened in markets today. We saw canola down $2.60 to $627.50 a ton. Minneapolis wheat was up 3 cents to $5.49. Kansas wheat up 3.5 cents to $4.88.5. Chicago wheat up 3.5 to $5.03 3/4. Soybeans up 1.5 to $10.50. Corn up 3.25 today at $4.23. Bean oil was down almost 6/10 of a cent at 50.07 cents per pound. Canadian dollar rose slightly, 16 points up to 71.47. Live cattle down 560 at 239.83. Feeder cattle was down. Limit down today, 9.25 dollars per hundredweight at 361.02. We're going to get into why that happened today as well. All right, I'm going to talk about some bullish stuff here in the oilseed market. Here's February Euronext rapeseed. Now, I'll fully admit, and I've been looking into this, I don't know why Euronext rapeseed went up this much today. It wasn't just on this one contract. It was across most of the calendar in the Euronext market. So something's happened in Europe. I haven't seen the headline yet, but we did see some bullish reaction here, trading above the 20-day, trading above the 50-day moving average. It looks like this market has seen some tests of the 50-day before, or getting very close. So this is an important level of resistance here for your next rapeseed. And if it continues in this fashion over the next couple of days, I think that would open the sky up a little bit for this market to advance. And I think that could be helpful for us here in Western Canada overall. Again, I'm not sure why that happened, but plausible explanation might be in the crude oil market, although I'll explain why I might be wrong about that as well. So today we saw a rally in the crude oil market on possible U.S.-India trade deal and an unexpected draw in the inventory. So a good day for crude oil. In theory, that should have moved oil seeds or vegetable oils higher, but we didn't necessarily see that. We actually saw a decline in soybean oil today, which was interesting, again, considering the rapeseed response today. Nothing major change in the direction here of soybean oil, just a couple of negative days in a row, which is going to kind of test some of this trend line resistance here pretty soon. Although it's kind of been trading sideways, and even a break of that trend line might not mean a total collapse of soybean oil at this point. It just looks like it's more directionally biased towards sideways at this point in time. Here is the palm oil market, which is similar. It did see some gains into the beginning of October, but it has faded those gains as palm oil got a little bit too expensive, and we were seeing purchases of other vegetable oils come in as a result, kind of fading the palm oil market. So again, all of this is relevant when I kind of talk about canola here. We have seen some very sideways trade in canola. Lots of days where the end result was almost unchanged, although it has been fading over the last 4 or 5 days into the negative. We essentially closed right today, right on the 20-day moving average. We're still kind of above that channel that we've been seeing it trade through, except that channel is declining. So it does continue to stay above that channel, even on a sideways trade, which isn't a terribly bullish sign at this point. But I do want to give you some good news here on canola. The last COPA, or Canadian Oilseed Processors Association weekly crush report showed that 252,419 tons was crushed in last week, or the week of October 17th. This is a huge amount of canola. The cumulative total now for the crop year starting August 1st is 2.447 million metric tons. Now, that's pretty amazing, but that's not the best thing. This capacity utilization, so if you take the 252.4 thousand tons that was crushed, COPA also reported the capacity utilization at 93%. That also means that COPA is calling for a max capacity currently, without any of the upgrades or new plants opening, at 14.1 million tons. So we are setting up for a record, absolute record year of canola crush this year, which we need given the absence of Chinese buying at the moment. All right, let's get into one of the big problem areas today, which I mentioned before was cattle. President Trump said on social media today that American cattle ranchers have to get their prices down and that the tariffs he's enacted are the only reason they are doing so well for the first time in decades. He said this in a Truth Social post. I'll read this out for you here. The cattle ranchers, who I love, don't understand that the only reason they are doing so well for the first time in decades is because I put tariffs on cattle coming into the United States, including a 50% tariff on Brazil. Trump wrote on his he wrote that on his True Social platform. If it weren't for me, they would be doing just as they've done for the past 20 years, which is terrible. The post continued, adding, it would be nice if they would understand that if they also have to get their prices down, they also have to get their prices down because the consumer is a very big factor in my thinking also. I don't know how you feel about this, but and I would love to ask an American cattle rancher how they feel about this, but I think lots of years of low cattle prices shrunk the herd size due to profitability. I think the tariffs added a layer to that. I think disease in places like Mexico added to that as well. I don't know how President Trump thinks that the cattle ranchers in the US are going to be able to decrease the prices with a snap of a finger. It's not like they can manufacture cows to create a better situation for the supply. In fact, he probably has more power to increase the supply to lower the consumer price for beef than the American rancher does. Here is what live cattle did. Again, this wasn't a limit down day for live cattle, but it did come down pretty heavily. Biggest loss we've seen since early September. Tested the 20-day moving average here. And here's feeder cattle just to kind of give you context here. 9.25 down today. The daily limit was 9.25. Tomorrow we see an expanded limit of 1375. Last time we saw this limit down move in feeder cattle, which was just 3-4 days ago, or Friday, I think it was. We did not see the following day trade down to the expanded limit. In fact, we saw it move back up. So I'm not sure just how much that expanded limit is going to come into play. And I mean, if the cattle market can go down limit down on some Trump quotes, then it probably can also rebound on Trump quotes as well. So I'm treating this with a little bit of kid gloves because a market that trades on comments by Trump can be very volatile, and you don't want to get caught in that storm, so to speak. Here's what that did on the charts. We did break down below the 20-day moving average. That might signal some technical sell down, just unopposed or unaffected by comments or anything like that. Might just be a technical signal, and we might see some further weakness. But overall, I don't know what to make of it. I still think that the risk is on the bear side, meaning that if you are long cattle futures, it may be a good idea to cover yourself or at least have some kind of insurance there. All right. We only scratched the surface here on this YouTube channel about Western Canadian ag markets, but please subscribe to this YouTube channel and think about subscribing to our premium content as well. You get morning reports, ad hoc reports as the news comes in, as well as a more detailed weekly report straight to your inbox. That's only $99 a month, and you can go to canadianagmarkets.com/subscribe to subscribe. All right, thank you for joining us. Have a great day, and we will see you again tomorrow.